Hello, everybody, and welcome back to another incredible episode of the Loan Officer Wealth Podcast. I am here with Veronica Love. Veronica, thank you for being on the show.
Hello, thank you for having me. Good to see you again, Chris.
Absolutely. So you and I have known each other for a long time in the mortgage industry, and you have made such an incredible impact on the industry. And our topic today is how to buy or sell a mortgage business. And I think this is going to be a very well received episode. And with what we've discussed thus far, this is going to be incredibly valuable. So again, thank you for your knowledge and for being here.
Oh, thank you. And I'm going to start with a disclaimer because I think every good podcast starts with a disclaimer. In no way am I an expert on this, but I am thrilled to be here to share what I've learned as I've consulted many people on both buying and selling books. And I'm passionate about it because I think it's one of the biggest missing elements in our industry right now. I do see an aging population of our industry, and a lot over the past, like even 3, 4 years, I've seen a lot of my friends retire, but without much of a strategy. And I
Yep.
just think, you work so hard for 20 years, 20 plus years in this business to what? Piss it away at the end? Like,
Yeah.
for lack of better words, it's like they drift off to Arizona or Costa Rica or wherever they're going, and the business just kind of drifts away because clients know you're not available. But I think you're missing out on so much potential. So that's why I'm here today. Is I wanted to, talk to you, Chris, and maybe share with others about how this can be the steps that you can take to maybe make sure that this is something that lives beyond and in your retirement you can benefit from.
Absolutely. So let's get started at the beginning. So I think everybody here understands that the worst time to sell is right now because you're unprepared, you don't have the structures in place, you really want to get ahead of this thing. What do you think is kind of the optimal roadmap to positioning yourself and then being fully prepared for an exit?
Absolutely. Well, I'll tell you a story. During the holiday season, I made the round to a number of Christmas parties, holiday parties, and there was two women talking about how they'll never really retire from this business because you can work as hard as you want or drift off or anything else. I was cringing. I couldn't bite I couldn't bite my tongue anymore. And I said, ladies, what I'm hearing from you is that yes, we do have the potential to work in a different capacity as we age in this industry or, fluctuate in life circumstances. However, if you're already thinking of a retiring, you're probably too late.
Hmm.
You're probably too late to prepare your book for a good sale. And this is why you want to make it as attractive as possible to a buyer. So if you're already starting to check out mentally, if you're already dreaming about retirement, you're probably already drifting away from the business a little bit, which as a buyer is not making it super attractive for me to buy into your business. So, inserted myself and said, I know you're not asking for advice, but can I give you advice? If you're already thinking this way, why don't you find a partner
Yeah.
and carve out a 5 year plan? Or if you want to retire sooner, carve out a 3 year plan. But in my mind, it should be at minimum a 3 year plan. I know people who have bought a book and literally just like one day it's your book, Chris, and the next day it's mine, and you walk away. In my mind, that doesn't work. I wouldn't pay for that. And we can go through the reasons why. But I think, if you're already starting to think or dream about retirement, today is the day that you start to work through the tips we're going to give today and start to find a like-minded partner that you can maybe pass the book along to and sell it to.
Yeah, and I love this. And I think some of the fundamentals that we're going to go through are phenomenal for you to put into your business, even if you're not thinking about exiting right away, because life has a funny way of lifing. And you will run a better organized, more efficient, more profitable mortgage business if you have built it in a way where it is an asset for somebody else and it's not just a paycheck and every deal is, what you're "Oh, can I buy that? Well, how many mortgages is it? Okay, yeah, I can go out and buy that, So, what do you see as the things that you look for when you go in and you analyze a mortgage business for sale? What are the fundamentals that you're looking for them to have in place to know whether or not they're on the right path? Like, what should a mortgage business look like?
Well, and I think that's why this conversation is so great for anyone, regardless of where your tenure is in this industry. Even if there's new agents listening to this right now, logging in, I think now is the time from day one. If you can put the right habits into place, then it won't be as hard later on when you're preparing your book for sale. And what I mean by that is database is everything. A lot of people in this industry have worked for 20 years and have never marked their deals paid, closed, completed, which doesn't allow you to trigger a database to send out like mortgage renewal anniversary notes or anything like that. So then they find themselves getting ready to retire. Somebody's interested in their book. Their database is a hot mess. They
Yep.
might have 4 different Excel spreadsheets. Some of it's in file folders still. And they have to hire somebody to do all this data entry, even to just make it attractive to sell. So they're incurring costs. It's a headache. And the buyer isn't so impressed because everything's everywhere. And I'm
Yep.
sure, as a buyer, they start to think, well, is it all together? Like, am I missing out on opportunities here? So if you're a brand new agent listening to this, start from day one, even if it's a basic Excel spreadsheet, but there's so many systems out there now you can use to document everybody from prospects to referral partners to clients. So that's the number one thing is I would look for how concise is this database? A lot of people say, I have 3,000 people in my database, but break that down for me. I want to know how many of them are past clients? How many times have you done mortgages for them? What do those mortgage products look like? When are they coming to term? Where are we in the cycle? Are we in 3 year and your massive book is renewing in 2 years from now? Um, are they lawyers? Are they appraisers? Are they referral partners, financial advisors? What are you truly selling me? Are you selling me just a book of clients or prospects? Or are you selling me an opportunity with some key referral partners too?
Yep.
And then we can talk about the logistics of how you make that actually stick and work. But the database is number one, and categorizing each of them to what category they are: prospect, client, repeat client, and where they are in the stage of their mortgage. Because if I'm going to buy this book, I want to be able to have line of sight to, uh, you know, who I need to call first.
Yep.
Because here's the thing for all the buyers out there, you are going to have to work incredibly hard in the first year of this transition. And if you work really hard in the first year, it will pay off. But if you don't, you're wasting your money from
That's
day
right.
one
Yep.
because you have a whole bunch of people to win over. Regardless of how much that partner endorses you, you have a lot of work to do. Does that make sense? So database is definitely number one for me. And what does it look like? What shape is it in? And where is it in? Like what system is it in?
Yeah, absolutely. 100%. And I think arguably your database is the most profitable asset that you have in a mortgage business. So just getting that in place, being structured and organized, that's the number one thing that I see people struggling with when they actually want to do proper database marketing. Database
Mhm.
management is the first part in like for our concierge product, we can't make phone calls to people if we don't know who they are. People will come to us and be like, okay, I've got 800 past customers. And it's like, well, no, you've got 400 pre-approvals, you've got 100 random contacts, and you've actually got 300 past customers.
Right.
Being able to have that organized is so important. And then what about the ongoing messaging? So I understand the data is important, but what about systems in place for keeping in touch with people and having analytics like, hey, when I sign up a customer, I get an average of 2.5 referrals that close from every deal that I do. Do you see people with actual tangible analytics like that in the mortgage industry?
Absolutely. I've seen some very sophisticated proposals out there. So basically, you want to put together, if you're going to do this right, put together a proposal for sale.
Hmm.
Here's exactly my number of contacts in my database, the breakdown on those contacts as we just discussed, Chris, but also what do you have coming up for renewal right away? Do you have trailers? And are you willing to sell those trailers with this book or are you keeping the trailers? And I've seen sellers do everything. Some of them sell the trailers, which is really great for the buyer because at least there's a guarantee. We're not
Yeah.
financial advisors, right? So there's very few guarantees in this transaction, unlike some of the other industries that mirror ours. But trailers do. So whether you have insurance trailers or whether you have lender trailers, there is an opportunity there for revenue. But often the seller wants to keep those. So sometimes they're out of the pocket there. But who are your top lenders? So name the top 10 lenders and how much of your book is in each, because this matters. As we know, some lenders are really on top of their renewal game. So you might be buying a book that the lender is very good at taking that client away from you. So you might be buying a book that doesn't stick around. Now, there are tons of strategies to get around that, but it's really nice to have line of sight of what lenders there are. And then also marketing strategies, what has been already used? Has the database been farmed regularly, as you say? Are those drip campaigns in place? The biggest thing I like to do with somebody who's got a great drip campaign already in place and then has been in constant contact with that database is to weave in the new person in a duo photo. So they go and do a photo shoot. So, say you and I are working together and I'm buying your book, Chris. We go do a photo shoot, some lifestyle photos, some headshots, everything across the bar. And now the marketing changes. Every time you send out a drip campaign, my face is now there too.
Hmm.
So, we can do one of those meet me, like meet the newest member of my team, Veronica, and start to launch it that way. Here's the biggest tip I can give. Do not tell your database you are retiring. If the person who's selling the book starts to tell the database and all the referral partners, I'm checking out, Veronica's buying my book or she's taking over my book, those partners can all go. Mortgage brokers are a dime a dozen. The loyalty isn't there yet. You, as the buyer, need time to get in there and prove yourself and win over the business. If your partner who's selling it to you is already telling people that they're retired and they're out, that book can drift away really, really fast. Even if they're endorsing you, they might still be saying, you might be saying to every phone call you get, Chris, Veronica's your girl. Like, let's do a mortgage. Veronica's going to handle all the documentation, all your questions. I'm here if you need me, but it still doesn't matter because the client or the referral partner's already heard you're going
Yep.
and they've got another contact, right? Or
Yep.
they're searching for another contact. So creating that plan, especially in the first year of introduction, co-branding, all the materials, the familiarity is there. It takes a bunch of different campaigns to do this so that the customer is comfortable with the fact that there is now two people for the price of one. And it's a real win for the customer, but you have to position it that way.
Yeah, absolutely. And then what about referral partners? What strategies have you seen to transition the referral partner relationships over to the new owner?
So this is one of the ones I love the most. A lot of people, especially now that we're back out of the pandemic, are doing presentations to real estate offices, or financial advisors. Bring the new person, and the new person. So say you already had lined up some of these meetings, Chris. I should be the one doing the presentation.
Hmm.
You're there, standing along the lines. You might chime in every once in a while, but you're not the dominant player in these meetings anymore. I am instantly from day one. Even
Hmm.
though we haven't announced the transition or anything else, you bring me, we're a team on it. You can be there for question and answer period. If they're still gravitating you, we can see who's gravitating to you and who we have to handle more. But I'm now the new face. So if it is an office of 13, realtors, the newer ones are going to only see me, so the connection will be there. The legacy ones that you've been working with for years are still going to gravitate, but then we know, okay, these are the four we have to work on.
Yep.
So from day one, every single meeting, whether it's a big office presentation like that, or whether it's a call, whether it's a Zoom, I should be the dominant one talking to the customer or to the referral partner, and you chime in. So we're truly a partnership in it, but I'm becoming more of the face in it.
Yep. That
Here's
makes
the
total.
thing about here's the thing about clients and referral partners, especially realtors. They don't care who they're working with as long as they get the answer fast,
Yep.
right?
Yep.
People will gravitate quickly if you do a good job servicing them.
Yep.
Service will win the day. If you do a bad job servicing them, it won't work. I
Yep.
love this. Recently, I was talking to two people who are just in the transition right now. They added a clause into their agreement. So the buyer said, I'm going to put you on 24-hour notice. So if a call comes in or an email comes in, you might be checked out, laying on a hammock in Costa Rica, but I want within 24 hours, you have to pass that lead to me. Okay. Well, the buyer or the seller said, okay, well, buyer, you need to put a 24-hour guarantee in for yourself too, because these are my babies. This is my book of business. I've nurtured this forever. I want to know it's being taken care of well. So I'm going to add a clause for a 24-hour turnaround as well. So you need to respond to the referral partner or the client within 24 hours. I love that commitment to each other
Yeah.
because both of them have clear expectations of their roles in this. And I think that's the biggest metric you can put into these agreements are what are the expectations in year one, in year two, year 3, 4, and 5. And notice I said multiple years. Again, back to reiterating, this is not an overnight transaction. It won't be worth the money you're paying for this book. You're taking a huge risk paying, unless you get it for nothing.
Right.
If you're getting it for a very low price or nothing, then by all means, let that person drift off and work the heck out of the database. But the most beneficial agreements that I've seen work out have been the ones that have a multi-year term with different roles and responsibilities of both parties over that term.
Yeah, that makes total sense. And then what about internal? So, internal team members, relationships that you have with underwriters, the lenders themselves. How do you approach that aspect of the business and starting to transition a team?
So important. I've seen people do this poorly and lose their main underwriter.
Yeah.
Not so much the lender side. I mean, the lender side is definitely important as well in bridging the gap and having those relationships. Usually the person buying already has some relationships. I mean, maybe you're a newbie, maybe you're in the first year of business and you don't have a lot, but most of them, if you're able and capable of buying a book, you've probably got a few years under your belt and some income there. So you've got some lender relationships, but the underwriting team, whether it's a doc assist person, underwriter, customer service person, first of all, you have to decide how many of those people you want to retain. Is there room
Yeah.
on your team for them? Do you even have a team? Maybe it's great because you're absorbing a team who already knows the database well, the client base. They can be that continuation and bridge the gap of that person, like retiring and starting to vacation more or drifting off. But I've seen people do this really poorly where they put the sole focus on the person they're buying from and ignore the team.
Yeah.
And then they lose underwriters.
Yeah.
And that is gold. If you can at least keep those people to see if your working relationship is going to be good, because that transition period is so important.
Yeah.
These people are already trusted by a lot of these referral partners or clients. And so you want to maintain them as much as possible, I would say, and do a big splashy announcement for them. I mean, they're kind of like, I'll do a sports analogy, which is really bad of me because I really have no line of sight here, but they're being traded, right? They're being
Yeah.
traded and they might not like the new team that they're being traded to. So
Mm.
you have to get them to like you.
Yep.
It is a lot of energy in the first year to make sure that everybody likes you. It's a likability project and a trust project. How do
Yep.
you earn all of their trust?
I could not agree more. So, as a seller, you get the great tips so far. You get your database organized, you get all your data together, you get your numbers, you put your processes in place so your database is as profitable as possible. You've got referral partners, you've got a strategy for referral partners, marketing and advertising. You bundle it all together after doing that work over a year, 2 years, whatever it is. Now you're ready to go to market. How do you do that? How do you say, okay, you know what, my mortgage business is for sale? There's business brokers, but I don't know of any business brokers that work specifically just for mortgage people that are looking to buy their book. What does that look like?
No, there isn't. There should be a broker for this, right? Brokering these deals. I feel like I've become one. My colleagues have definitely spent time on this as well. We get consulted a lot. So I have a ton of agents that will call me inside my organization and outside of it and say, I'm thinking of selling. Do you know anyone who's buying? Or I'm
Hmm.
thinking of buying. Do you know anyone who's selling? And I keep a roster. I have an Excel spreadsheet because opportunities present themselves all the time. So I think the biggest way is working, the industry and making some calls to some key influencers, people who know people. The best way is if you already have an underwriter, if you already have an agent on your team, if you already have somebody within your organization, it is definitely the smoothest transition. It
Hmm.
is really hard to sell your book to another brokerage or, it just complicates things. It is so much smoother if you can find somebody within your own brokerage to sell,
Yep.
but especially if somebody's already working on your book. So I can think of an example where the underwriter had been underwriting for these two brokers for years. So already was on email signatures, already had line of sight to the whole business. And then the transition took, a 3-year period in one situation, a 5-year period in another. And the clients are already like for the buyer, for her, it's such a beneficial experience because she already knows the business.
Yep.
It's a good investment because the clients pretty much already trust her. Will some drift away? Possibly. But if she works really hard to maintain it, I don't think so.
Yeah,
When you don't know each other's book at all, it's a little bit harder, so that's why the term might stretch a bit, but looking for somebody who's like-minded as well. This is an emotional thing too.
oh
If you
yeah,
care now, some brokers get into the space to completely monetize it and sell it, like, with that whole goal all along, but most of them don't do that. Most of the people I talk to have been brokering for 20 years. They wanna get out, they don't know how to get out because not so much that they were even thinking about making money, they were worried about their clients and leaving
that's
their
right.
clients hanging. So they drag it on longer than they are, and they almost burn out because they're looking after the client. So the client relationship is so important to them that they don't want to leave. Well, there's tons of ways that you can handle this too. Some people want to retire because they don't want the main responsibility, but they still want to dabble in the business.
Yep.
They still want to have the relationships. So I've seen the most successful partnerships incorporate this into the relationship. Like, here's the plan. Or maybe it's you look at other revenue avenues as well, mortgage insurance, home and auto. Is there an opportunity for this person to work on those pet projects so that they're still talking to clients, not so much in the mortgage anymore, but they're cross selling and keeping the database alive, still feeling invested, but it's not an emergency situation. There's no urgency on it. They don't have to do something today. So they still get to experience the retirement aspects, but still get to be invested in a little bit. That way, emotionally, they can disconnect over time and not suffer in retirement. Do you know what I mean? Some people really
Mhm.
struggle with retirement.
Oh, for
And
sure.
I'll bridge this to another clause I think should be in these agreements is I've seen some people retire, sell their book, and then 2, 3 years later resurrect themselves as a mortgage agent
Yep.
because they couldn't handle retirement. Well, imagine you just bought my book and now I come back and
Yeah.
I announce to the world I'm back. The data could definitely transition back to me. All those clients could transition, the referral partners could transition. So I think it's really important for the buyer to put a clause in there that says, you're not coming back. Or if you're coming back as a member of my team.
That's right.
You can be an agent, but you have to be on my team under me with a split. Here's what your split will look like so that there's a clear path. Because I think I've seen that happen more often than anything is the person comes back, right?
Yeah. Yep, absolutely. And so those are two very incredible clauses. Like, A, you need time and the actual expectations of client management on both sides. You've got a clause for, I guess, that would be competition, a competition agreement in a
Yep.
standard thing.
Non-solicitation, whatever you wanna call it.
What else do you see as key clauses that should be in an arrangement?
I'm not an accountant, I'm not a lawyer. I'm not a financial advisor, but I'm here to share what I've seen, and I have seen some people take out life insurance policies. So
Key
this
man
is a
insurance,
big new
key person
development.
insurance.
Yes.
Okay.
So on the person. So for example, I'm buying your book, Chris, and we have a 5-year term of payment. So I'm making monthly contributions. We might be sharing on split. There's so many different ways you can structure the payment of this. I know probably everybody's eager to talk about payment. I skirt around it a little bit because I'm usually consulting both parties. And so I don't get into the payment discussion because I don't want to short somebody and I don't want to, get into the weeds on that part. But when they figured out their payment structure, it's usually a multi-year term because somebody usually doesn't have the amount of money to slap down right away.
Yep.
Nor should you. I don't think you should because that person can take their money and run. But
Yep.
for the seller, if I'm buying your book and we have a 5-year plan, what happens if I become disabled or if I die?
Yep.
Now you've got 2 years of the 5-year money, but where's the remaining 3 years of those payments? Do you challenge the estate? It just gets really messy. And now I've already connected with the database. You've already endorsed me. The marketing's already out. So it's not like you can bundle it back up and sell it to somebody else.
Yep.
Technically, you've sold it, but you haven't got all your payments.
Mm.
So I've seen a couple situations now where life insurance policies are being taken out as well. So you're kind of buying a policy on me to make sure I live through the term. It's just very prudent. And I mean, obviously, these are coming from financial advice and from accountants and, good line of sight to all the different steps So this is not something you do on a napkin in a bar. This is something that you put together a proposal, you figure out the evaluation of your book, you hone it down to what's reasonable. Maybe we should talk about that too, Chris, because wow, do people think their book is worth more than it actually is?
Let's get
You know,
into it.
we're in the real estate business. We joke about our clients thinking their home is worth more than it actually is all the time. But then when we go to sell our book, all of a sudden it's $1 million book. It's not $1 million book. It's only worth what a buyer will pay.
Hmm.
And and you have to be realistic and really think about the buyer's perspective and the risk involved. Because like financial advisor, there's no income coming in here unless it's earned, right?
Yep.
There's no guarantees unless you're selling trailers. Maybe you have 40K in trailers, so there's a guaranteed of at least 40K. But most people don't want to sell those trailers. So what are you really selling? And I think the sellers really need to be reasonable in their requests on what is the expectation should be. And then also not just reasonable in the selling price, but reasonable in the terms and payment plan.
Yep.
So I've seen everything from, okay, it's 10K up front, month one, right? Almost like a deposit on the business. And then there's a payment plan of whatever, $1,000 a month. We're just throwing random numbers out. Others have done payment up front, but a 50-50 split on every deal.
Hmm.
I love a split because the seller is still going to have their head in the game
Yep.
because they're not going to earn unless that deal closes. So they're aligned in their mutual, desire for those deals to close because they're both going to earn on that potential. So the split changes. So I like the combination of both. I believe the seller should get some kind of, skin in the game from the buyer right away. But I like the split because it's mutually, especially if there's a term of 3 to 5 years, which I advise on, there's some mutual skin in the game for both parties.
Yep.
So honing your expectations to what's reasonable to a buyer as well. A lot of these buyers are new. They're maybe 5 years into the business. Maybe they've had good success and they're at 15, 20 million already. But they don't have a huge lump sum of money to slap down on this. And if you really care about your clients, you want to make sure that they're not stressed financially and they can work this and it's going to be done the right way.
Yep, absolutely. And so, just to dive a little bit deeper, if you were to say there's an average deal structure or what would be ideal, like how much do you see as an upfront payment? How much do you see coming in trailers as a result of the deal being done? What do you think is an ideal structure?
Well, my answer is not going to be one everybody wants, but it depends.
Yes.
It depends on all the factors we've already talked about. Your book is worth more if it's structured a certain way and put together in a better way. It's just like staging your house. If your house has had no work done to it and it's not staged, it's not going to be attractive for a buyer. Stage your book of business so that it's attractive. Put it all together. The average is usually 2 times the value of business, like the two best. So here's the problem. I was going to say the 2 best years, but here's the problem. We just came out of the 2 best years in our industry.
Yep.
So for a buyer right now, if you're just looking at the 2 past years, you're foolish. I would pull the past 5, 6 years and
Yep.
look for the ebbs and flows and then evaluate that and see what makes sense as far as their best year and why they were the best years. Look
Yep.
through the history and talk about, well, what happened in 2015? Why did your book sink that year? And why did your book take off in 2019? What happened in 2020 that year? Because you went through the roof. And what did you do? What were your metrics? So maybe somebody went through a health scare. Maybe somebody went through a divorce. We definitely see ebbs and flows in our industry. We're salespeople. There's ups and there's downs. But if you're buying a book, I would definitely look at a 5 year average at minimum, and then take their earnings and kind of add them all up, the annual income, and also look at the expenses to the business.
Hmm.
Some people have very little expenses and some people have a lot. So you have to take into account, are you absorbing staff? Have they already locked into some systems that you can't get out of that have a subscription fee?
Yep.
Because you're buying the book, but there's somebody has to pay those subscription fees. So ask about all the different expenses. So really look at the financial statements. Financial statements have to be shared here,
Yep.
and full transparency has to be there. You can't just say my book is worth 800,000. Tell me why you think it's worth 800,000. Show me your past 5 to 10 years of income and all of your expenses for those same years. Yeah, you really have to look at the numbers here. I know I'm wishy-washy, but it truly, truly depends because some people have their whole business packaged so well for sale, and some people don't. I'll give you another example. Do you have a website? Is the website in Veronica Love's name?
Yep.
Because that's going to be challenging. Am I buying the rights to Veronica Love's name? Or am
Mm,
I buying the rights to a team name? Am I buying the rights? Do you have URLs that, like, maybe it's Aurora Mortgages, right?
right.
And
Yep.
what am I actually able to buy that's not just the database? And does that make it more lucrative? How many Google reviews do you have? Can I transition that landing page to my name now? Because you can do that. So is there already some reputation there that I'm buying into? If none of this is put into place, then you don't have a very attractive book for sale because those aspects can make your book, um, maybe the purchase price won't be much different, but it will definitely be more attractive. It's just like sometimes, the furniture in a house isn't for sale, but it gives the buyer a better feeling about how that will look when they move into that house. So you want to make sure that's all packaged up nicely and that there's a lot more value there than just a database, just an Excel spreadsheet.
Yeah, absolutely. Veronica, thank you for being so generous with your time. I've got one final question that I'm curious about. So, of all the deals that you've seen done, how many of them are happening within the mortgage industry? And then how many deals are you seeing where it's people from related or complementary industries, either people that are just looking to get into the mortgage business or potentially a financial planner, an insurance advisor that's looking to cross sell services into a mortgage database?
So far, my line of sight has just been agents within the industry, existing agents.
Yep.
I have seen some bankers transition, so some mobile specialists transition into the business. They are hungry to buy books. So if anybody's looking for somebody to buy, they already have a database, but they're worried about their bank keeping it all and how much of it they'll be able to move over to the broker space. So they're definitely hungry to buy and eager to launch, their career in the mortgage business. But so far, everybody has been, in the industry, sometimes not always with the same brokerage, but it's definitely easier in the same brokerage because you can use all the same systems, the CRM, deal processing system, everything's there. But most of them have been within the industry. I've seen a big age gap though.
Hmm.
It's a lot of the 27-year-olds to 30-year-olds buying the book, or definitely the under 40 segment is buying the book.
Yep.
And it's the over 60 segment that is selling the book in
Wow.
most of my experiences.
Yep.
And just again, a gentle reminder that there's an emotional play here.
Yep.
The person selling the book is usually struggling with this in some shape or form. So as a buyer, be empathetic.
Yeah.
Really talk about you're basically creating a marriage for a certain term, a term marriage, and you should be creating a prenup of what that looks like when the marriage is over, because
Yeah.
this marriage has a term. So
Yep.
really think about be compassionate to both sides. And if you approach it that way, it's successful. Um, I can think of one situation where in the first 3 to 6 months, I got a lot of calls. The seller was like, they're not doing it right. I don't like the way they're handling my clients. They don't call them back fast enough. They're not doing this right. They're not doing that right. The buyer was like, I would just wish they would get out of the book and leave me alone. I just wish I could take over. Um, Within a year, both of them were singing each other's praises.
Yeah.
Oh my gosh, she's doing such a good job with my clients. It's so incredible. Oh my gosh, she has just been fantastic resource. I will keep her on as alumni forever. This is the really cool thing. If you have a good relationship, and I'm working on a deal 3 years from now with one of your previous clients, Chris, I can call you and say, I've hit a hurdle. I'm running into some kind of obstacle. And Chris, you can pick up the phone and call that client and
Yeah.
work through it and
Mm.
save the deal. And the client feels good, but I feel especially good because I closed another deal. So if the relationship is good between both parties, you should tap into that person like an alumni for a long, long time.
Yeah, that is incredible. Well, again, thank you for being so generous and for a fantastic episode. For all y'all out there listening, that is definitely worth a 5-star review on iTunes. So make sure you head on over to iTunes, hit us with a 5-star rating and review. Veronica, how do people get a hold of you? I'm sure there's going to be some follow up questions and some people that are interested on both sides. So, how do people get a hold of you?
Sure, you can reach out to me. I mean, I'm all over social media, Instagram, LinkedIn, and Facebook under Veronica Love. or you can call me at 647-929-1241. And you can email me at veronica@mortgagegroup.com.
And all of that will be in the show notes. Again, thank you all for listening. And Veronica, thank you again for being on the show.
My pleasure. Happy to talk about this. Thanks, Chris.